Let's see. Streaming is activated. Let's make sure that the connection's been made. And it's been made. Perfect. Okay. Ladies and gentlemen, we are live at the TradingView show, episode number 9. I'm thrilled to bring today's guest, Mike Zaccardi. Mike and I actually go way back. We have chatted a number of times on StockTwits and on TradingView and on Twitter, and we just had this relationship that sort of has been mostly digital, but now we are communicating via video, via chat. And Mike is a CMT. He is also a CFA. And I think that his background is fascinating because he's also a writer, which he'll tell you more about. And without further ado, Mike, I think what makes sense is to introduce yourself and probably starting with how you got started in markets. And then we can build up because you have a CMT, which is a technical designation, technical analysis, a CFA, which is a fundamental designation. And I think it's going to be really cool for people to hear about your journey because you're a master at both worlds. So how'd you get started in markets? What's your background?
Yeah, I'm just dangerous enough in both areas. So I started writing almost 10 years ago at seeitmarket.com. I've always been interested in the markets, obviously. And after getting my CFA and CMT, wanted to put to work my passion for communicating finance, writing and orally. I also have taught here at the local university in finance. So in the last couple of years, really amped up my writing. Some folks may know me on Twitter. I do a lot of work with Seeking Alpha publicly, and I work with a lot of private clients, financial advisors, investment companies, for what I think is sort of my more serious work, as opposed to just the tweets and memes on Twitter. So that's kind of my background. And I've been a huge fan of TradingView for a long time and all the work you guys and the team have done, Steph, at TradingView. So love the product, use it all the time. My Twitter followers know the charts well, for sure. I got a few favorites. What a day to be chatting with you here with all that's going on in tech land.
And I must say, I think you're up to 23,000 followers on Twitter, which is, you have to put out a lot of content and be saying something right to amass 23,000 followers. So even before we talk about this NVIDIA chart that we have up in front of us and the wave of AI, so yes, if anyone's tuned into the live show, we are going to go deep into AI and have a good discussion about that. I first just want to have you maybe tell us about what type of content you focus on and what your specialty is in terms, how do you get 23,000 followers on Twitter, for example?
Yeah, so with Twitter, it's all about charts and putting something out there in a pithy way. I don't do a ton of, these long diatribe threads. My bio on Twitter kind of says it all. It's just charts, and a little bit of weather. I'm a kind of a weather nerd too. So, visuals tell the story, and Twitter is such a great place to do that. So, I just try and share most interesting kind of macro data I see, as well as, I've tried to put to work my technical skills as well with putting some trading ideas out there. So a little bit of a mix of kind of newsy kind of things, but also a discerning eye for what investors and traders should be looking out for each trading day.
That's actually pretty interesting that you you like the weather as well, and you're a chartist. Is it safe to say that there's some similarities there?
Oh, absolutely. I would tell my students that the similarities between technical analysis and weather are many, and really just between finance and weather. We're always trying to make the most probabilistic based decisions on information that we have. And in weather, for example, we have all of these models that spit out essentially data in map form, but you also have to kind of put the human touch on it to see what kind of matters and what doesn't. So, weather forecasting, technical analysis does not provide an absolute prediction, but you're just trying to make the best informed decision on all the variables you have.
And who do you think so far has the better track record? Technical analysts or people trying to predict the weather?
The weather folks have gotten pretty good. There's actually a really cool chart that I love that the Hurricane Center puts out on how accurate they've gotten with hurricane forecasts. So definitely much more science involved in weather, obviously. And when it comes to traders, a lot of times we have what's known as physics envy, where we wish we could have that precision that comes with a scientific field. But as we all know, when it comes to finance, there's a little bit of science, but a lot of it is art when you're trying to formulate the best portfolio and the best risk reward strategies.
Yeah, and that even kind of leads us into this AI discussion too, because you wonder how AI will actually, just seeing the similarities in weather and in finance, how AI and what that might bring to the industry might change the prediction rates as well. Not so much on trading, because you're exactly right, there isn't that underlying physics. But if weather and forecasters are getting better and better, you start to wonder, wow, will AI increase that precision even more?
Yeah, it's going to be. I mean, it's moving quick. I think we'll know. We'll probably know sooner than we think. So yeah, we've already seen some testing of AI running portfolios and how well they perform versus active managers. Yeah, it's we're all going to be witness to some really, really interesting stuff. And anyone who tries to predict what's going to happen, it's probably a whole lot more that we don't know that we don't know. It's kind of that Donald Rumsfeld old line.
And on that note, with the chart in front of us, NVIDIA, they just reported earnings yesterday. I believe it was their revenue guidance that really was the headline. Is that right? Yep. Their revenue guidance was the headline. And looking at this chart of NVIDIA and just thinking of AI, before you and I started this interview, I thought we had a great introductory conversation about how oftentimes technology like this sometimes is used as sort of a talking point where maybe jobs will get taken or it will impact the workforce. And before we really get into just a single company like NVIDIA, how about from a macro perspective of AI and what that could do to the labor market? Do you have any thoughts there? I know that's probably on a lot of people's minds, which is, hey, is this artificial intelligence, which I'm just learning about, going to take my job one day? And I think it's something that we should get right to, basically, because there's a lot of people wondering and thinking about this.
Yeah, we all do. Myself, I look at what I do. I do investment writing and content creation, and that's something that that's its total wheelhouse. So it's like, wow, I feel like my job could be in jeopardy. But a lot of folks may feel that in whatever industry that they're in. So one thing I would encourage people to do is just take a step back and look at the people around you, like your friends, your coworkers, your family. Like, think about the job they have. Do you think their job could be replaced? And that might give you a little more security about your position, because we might start getting really fearful and catastrophizing what we think could happen to our job. But history shows that when we get these breakthroughs, whether it was the Industrial Revolution, whether it was manufacturing in the 20th century, and then the tech boom of the 90s, these things create jobs. They don't destroy them. Could this be the thing that bucks that trend? It's just so revolutionary. Maybe so. Like, we don't know. I'm not a futurist, but you just look at the past, like good technicians do, and see what the trend is. And the trend suggests that there's going to be jobs from this that stem from efficiencies created across industries that we don't even know about. And that's what's pretty cool. So while the initial response we may have is fear with this, take the approach of Danny Kahneman. Step back, do a second level thinking exercise, and think about just all the new things and the positives that could come out of this. And that's what I try and tell myself. And I try and be optimistic about it. And I think I am. It's going to be awesome to watch from what happens in the labor markets.
So I have so many questions come to my mind, especially how you started with your writing in the financial research and writing that you do. And before even asking a little bit more about how you might use AI to improve your writing or to go faster or more efficient, curious to know, as a financial writer and someone researching markets daily, about this AI narrative, and if it's been sort of making it to your news desk daily, and if you're kind of sensing this narrative pick up. Is it becoming more popular? Do you kind of see readership stats picking up? Is it truly hitting mass market? What's your view on AI at this point in terms of in the media cycle?
Yeah, it's interesting. I've been to a couple conferences, and everyone talks like if you could have a counter of ChatGPT that comes up in some of those things, it's definitely crazy. So it's really a buzzword thing now. What's funny is no one says Bard. It's always ChatGPT. So ChatGPT has become this verb in I think so many industries, and I'm not even talking about just finance. When it comes to writing, a lot of my clients, they're interested, they're curious about it, they want to talk about it in newsletter types of things. And this has all come about in just in the last 6 months, as so many folks have signed up for open AI services. So it's increasing. I would say, this isn't like, it's still the same old things, I think, when it comes to markets writing, the Fed, inflation, earnings, and then AI is kind of this niche of it. So to be honest, that's still kind of where it is. It's not this overarching, like, ignore what else is happening in the economic and corporate world. So yeah, I'm not going to pound the table and say AI is everything. That's not what I'm seeing right now, but it could be a whole lot different 6 months from now. That's for sure.
I would say I would echo similar sentiments, especially on my Twitter feed, for example. It felt like if you sent out a tweet with the words Chat GPT, you had like a 1 in 5 chance of going absolutely viral, because it kept popping up in my recommended timeline, my home timeline. So it's interesting to hear you say that, because it sounds like it's happening to everyone in that regard. And how about the aspect of being a professor? And by the way, that's also such a cool thing to add to your resume that I hope that people are gathering as they listen, which is you're also a professor. Have the students caught on yet? So, because I feel like we can see this from different generations, and each generation might be looking at AI differently. And curious if any students have mentioned it, or if they're interested, or how about this one? Have any students tried to use it on a paper or anything of that sort? Because I can imagine that's got to be going through some students' minds.
Yeah, so I'm actually not teaching this semester, but I've interacted with students at the university just, kind of privately. And, they definitely know about it. And, yeah, I don't know how much it's infiltrated what they do. I'm sure those Zoomers know what they're doing, though. And I may teach in the fall. And one of the things I've considered with my curriculum is, whenever there's a question from a student, one thing I could do is immediately prompt ChatGPT with that question and then discuss the output of it. And I think that's an interesting way of incorporating it and not just setting it aside. So I'm sure there's a lot of crusty professors who want no business with it, but they're fools if they're not incorporating it into the student experience. So yeah, and you have to reward students for being creative with coming up with solutions, harnessing that. That shouldn't be a punishment, my view.
So that's so cool. And for anyone listening, if they do spread that concept around, remember that's Mike Zaccardi who shared that first, I think, which is so asking the students to almost challenge the output. No, maybe not challenge, but discuss whether they agree or disagree with the output of ChatGPT or any other AI tool that's coming up with an answer based on an input. That's fascinating to me. And I'm guessing the reasoning behind that is to sort of make it more, well, exactly. That's putting it more of a position to be harnessed or to be evaluated, or it still needs the human touch. Is that kind of the exercise in a way?
I think so. And then also from just a pure teaching perspective, a student may have a single question, but the OpenAI may not see the big picture, like why they're asking it and what other factors are there to be considered. Now, maybe that's to come. Maybe, I'm sure these things will get smarter as any, language model would be. But one of the key things about using ChatGPT or any of those models is have to be good at prompting it with something. It's sort of like when you're learning something new and someone says, so what questions do you have? You might say, well, I have to know something to ask a good question. So with these, with OpenAI, you have to know what to ask it. So I think that would be a situation where an instructor could kind of guide into other areas where the context of the question is really important.
I love that. And it kind of reminds me too of the aspect of, and this is going back to our labor force questions, because I just kind of see the connection. And it was something I did want to discuss as well, which is I think about the story of the, I think of when automation started to come to farming. And I believe agriculture at one point was the sector that employed the most people. And as technology started to come to agriculture, people got really worried about their job positioning. And what's so interesting is, while it did impact the jobs, it actually did make it possible for people to do less strenuous and difficult work and to focus on other new things, which ultimately leads to probably the rise of the tech sector. So it's one of those things that you're making me think about as I think about students harnessing AI to build something different or to create a product or to make some process more efficient, that's right. Actually, they might find a way to get rid of some of these more strenuous tasks or difficult tasks, put it in the hands of AI, and then go focus on something else. Is that something that you've thought about sort of from a macro perspective, which is like, what's the next industry? If AI helps people not do such boring tasks, what will they focus on next, or does the market just figure that out over time?
Yeah, I think it's an interesting situation. Like, you got to look at the evolution of the technology and what it might look like. Again, kind of stepping in the futurist mindset, but we obviously see this year these mega caps surging on this, which makes intuitive sense. Nvidia being at the heart of it. They've built this moat in terms of they're like the only game in town. Basically prospecting AI. But as we continue down the path, I expect smaller companies to really benefit from this stuff because once the major companies produce something that's really usable and something that gathers mass adoption, that's when smaller firms can really benefit. And kind of like you said, the example in the ag industry way back when, that same evolution, I think, will be applied to a bevy of smaller size industries. And that's going to free up their time to make their businesses more efficient and to create things that we can't even imagine right now. So I think, people talk about AI like it's this long cycle theme, which I agree with. And years down the line, I think we're going to see a lot of the smaller companies that are kind of left out of the market rally, at least, participate. And even, obviously new sets of small companies and small cap industries will come about. So I'm optimistic on this broadening out and not just being something that the biggest of big firms are going to keep to themselves. I mean, just as it stands right now, it's open AI. It is literally an environment that there's no proprietary ownership of this, which Google kind of had their chance to do, and they, apparently got a little behind the eight ball with it. So I think this is going to really broaden out over the coming years, and it's going to be bullish for the economy writ large, in my opinion.
The aspect of Bard, I think, is interesting, because I do agree. It's almost, Google was, there's been words of them working on this over the last few years, but they never kind of got the same attention now as OpenAI or Microsoft being a part of that. The other one I think of too a lot is IBM. It's so interesting how much they did with Watson. They brought Watson on Jeopardy, and Watson was supposed to be this next wave of AI, but it never quite caught on. And, it does kind of tie into that, it doesn't always pay to be first. Sometimes it's better to be second. But when you just mentioning the comment about Google, I had to bring that up about IBM. And before we even dive into that, in terms of the large caps, it is perplexing to me as well that the large caps are really dominating the AI space. I do understand it, but looking at small caps and their underperformance, curious to hear what you think about even medium caps, right? So even if we're talking about the Russell 2000 or the S&P 600, I believe is an index, how come you think the market's not really respecting that? Because after all, the market's this intelligent being, but it doesn't seem to be valuing anything else but the large cap techs for AI, NVIDIA, Microsoft. Do you think they might give anyone else a chance, or is there anything that you're looking for, a ratio, anything of that nature?
Yeah, so we have seen some other stocks participate, but yeah, in general, it's really focused on the actual chip and tech spaces, and not so much your cyclical, your value, even defensive areas. I think that when it comes to the valuations and the momentum, this is where technical analysis really comes into play. When you get these events that drive headlines, that turns into flows, and fund flows is what moves markets, and that's certainly apparent in the short run. So to me, it's just that old truism of technical analysis. When it comes to momentum, what has worked in the previous several months tends to keep working. But as we get as bull markets mature, then you see a broadening out, you see sector rotation, and that's when we may see some of those value areas start to outperform. Of course, we have to be mindful of technical levels on things like the Russell 2000 and the mid caps. We are near kind of an important support area for the Russell. If we lose that could threaten the overall bull market itself from the October lows. So I guess the answer there is to be mindful of sector rotation and don't fall into the trap, I guess, that if we have just a handful of stocks leading the market, that's not inherently bearish. If you look back at history, bull markets can thrive on just a handful of names, and whether or not you get that broadening out isn't a big deal. It does lean bullish when you do get more participation from small and mid caps, but it's not a requirement. But certainly I am keeping an eye on the Russell, given its massive underperformance here. Valuation wise, yeah, I mean, this thing's trading 12, 13 times earnings, and it actually had a decent earnings season when you look at the beat rate among small caps. But we all know as traders, valuation means virtually nothing over the short run. But for long-term investors, I would definitely take a look at the world outside of large caps, because there's definitely some solid value there.
The aspect of fund flows and then tying it back to AI, super interesting. Is that because the market is potentially wanting exposure to AI, and one of the quickest way to do that is to allocate money to a large fund, and then it starts to trickle down from there? Is that is that the thinking there?
Yeah, I think so. I was just looking at some of the fund flow data. An outfit called EPFR puts out weekly fund flow data, and I think it was last week we had seen one of the highest readings of tech inflows in the last several months. I mean, it wasn't like an earth-shattering number, but the inflows into tech were substantial. So that'll be something that I think a lot of technicians will have to look at in the weeks ahead. Is that going to be a continuation, more money moving into tech, or do we see investors looking to expand their horizons in other areas? But the more we hear about AI and media, you look at Google search trends, you look at mentions on earnings calls. I mean, things like that are sentiment gauges that can eventually lead into where money is allocated among institutional portfolio managers, but also retail investors. So that definitely has a major impact on how these stocks move. And with today's technology, we saw meme stock mania a couple of years ago. Like, these moves can happen fast nowadays. So yeah, fund flows, I think this year are going to be really interesting to see how folks are allocating.
And then the broadening out aspect, because I something that we haven't discussed yet is just these types of really big picture terms for the whole market, because after all, these are really large sums of money that need to be deployed carefully, deployed in a diverse way. So then in terms of broadening out, that's the aspect where the market maybe starts to take risks based on new information. It starts to go a little deeper into the market or into other areas that it missed. Is that the way to think of that?
Pretty close. Like I would describe broadening out as very much that rotational feel where, kind of right when everyone's getting on board a certain theme, a new source of leadership emerges, and there may not even be a real fundamental reason. In fact, up until a few days ago, small caps were actually beating large caps for the month of May, which made like no, I guess, intuitive sense because AI was still this mega theme. Of course, that's been reversed in the last couple of days. But it goes to show that underneath the surface, when you step away from the media narratives, you can see a whole different market picture. And when you identify that particularly like a macro trader, like you can start to formulate better narratives based on the intermarket relationships. Um, so so yeah, we'll see if this is a temporary thing or if small caps actually reverse higher here, and that would fool everyone. It's just like Jesse Livermore said, the market oftentimes is designed to fool as many people as possible, as much of the time as possible. So we'll see how that plays out, but yeah, monitoring all the sectors and intermarket relationships is definitely important.
Love that quote, because it even it ties into really the number that maybe 90% of traders fail. That just shows how many people the market is fooling consistently. And I want to ask you, because to me, when people listen to this and meet you and hear about the way you approach markets and your background, as a writer, is this what you're covering? So if any listeners go and follow you, and by the way, I think Mike is severely underfollowed. I think he should have 50,000 followers on Twitter for as long as I've followed him and seen his charts. On that note, if they go read your research daily, is this sort of what they can expect to capture? You could sort of be this broad level market research piece for them?
Yeah, definitely. I keep my eyes on a lot of the sell side stuff, and there's always so much sell side research from the B of A's, the Goldman Sachs, the JP Morgans out there. But I try and find the ones that the charts that really matter. And when I post things, I'm not endorsing a stance, but it's I do find value in sell side research because they can chart something that is relevant and helps you understand what's going on in the market. So there's that piece of it. But then I also I do put out my own opinions in a sense with some technical charts that I'll post with trend lines and, what's outperforming and what's not. So that's another piece of what I do on Twitter. And all of that is to just keep my game sharp for kind of what I consider like my day job, which is providing insights and newsletters, writing pieces for other investment professionals. So that's kind of why I do it. It's both a hobby and my job, kind of. So that's what folks will find on Twitter with all those charts that they're out there.
Now, I did pull up a chart of Nvidia's market cap. And the reason why I brought this chart up is because yesterday at the close, before they reported earnings, before they really released all this information about how AI is impacting their bottom line, they had a market cap of about 750 billion. An hour or so after that earnings release came out, they had a market cap of 950 billion. I have to ask you, and this ties back into the AI trend, but I have to ask, have you seen a trend move a company that much, in market cap? Have you seen this before? And that is just a jaw-dropping sum of money for an hour's worth of news, which I understand it's huge news and it might change the tech industry in a pretty dramatic way over the coming years. But 200 billion in an hour, one quarterly earnings report. I have to hear your thoughts on that.
Yeah, I mean, I wasn't around in the late '90s. I mean, this is kind of reminiscent of like Qualcomm stuff or Cisco, some of those names. But yeah, in pure market cap size, and also the fact that this company is extremely profitable, it's so much different. So yeah, the fact that we gained, more than $200 billion in market cap on like something that was not already like beaten down is remarkable. We've seen market cap moves of 150, $200 billion before, looking at like Apple, Amazon, things like that a year or two ago. But in general, like those companies were not in like these steep uptrends already. So that is unique with Nvidia. It goes to show that uh, even stocks that have gone up a lot over a short time frame, that doesn't make them a sell, because there's still plenty of folks who are caught off guard. And then when you get one of these just stunners of an earnings reports, you get the slew of upgrades the next day, you get a little bit of short covering, but then you just get the FOMO effect. And with how fast things move now, that'll take stocks up that quickly. I mean, if we saw something like this in the late '90s, maybe it would have taken a couple of weeks for the market to digest it. But with today's technology, we all know how quick things move now. So, um, this is maybe a one-off thing now, but going forward, this is kind of the new normal. Like more gaps up like this as new information comes out. And you know, fundamentally, I mean, you can definitely make the case now that Nvidia is actually cheaper than it was before the numbers, given the sales and earnings expectations increases that we're seeing. Like for example, I think their data center revenues coming into this year were expected to be about flat, and you look at it now, and for the year, it's expected to be about a 90 to 100% growth rate. I mean, just like the consensus changes on these things are so different now on Nvidia. So yeah, huge gap up, but the earnings expectations, sales expectations are going up arguably even quicker, which is pretty remarkable for such a widely covered name.
Okay, you just, I believe, to many people watching the show, you just demonstrated something that is often not taught to new traders and new investors, which is the forward thinking mindset, where you mentioned how Nvidia's forward estimates changed so dramatically from this earnings report, and now Nvidia might be considered actually a better bargain because its revenue or its data center growth is greater than expected. Tell people about that mindset for forward looking, because to you, I imagine, this is how you've always thought of markets. It's how you've been trained, and it's probably what you've learned over the years. But I'm always amazed how many new investors or traders I meet are continually looking at past data. Not knocking the PE ratio, but there is that element of a value trap, right? You see something with an 8 PE ratio and just think the market's got it all wrong. But really, the market's looking out into the future saying there's a reason why that's an 8 PE ratio. It's because it's potentially declining. It might get even worse. What are your thoughts? Tell people how you learned that skill, and if you have any tips for people who maybe are just getting started as a fundamental investor.
Yeah, well, first of all, I'll say I'm the guiltiest one in the room at having a tough time figuring out like what's a true growth story, what's a true value stock, because like you said, you might see low PE ratios and think it's good value, and I often do with some companies out there right now in the energy sector, for example, or some of these banks that are trading like below book value, and then you look at some of these tech stocks with just very high earnings multiples. But what's different now is Nvidia, among others, are free cash flow positive, even though the valuation metrics are stretched. But you always have to consider the growth aspect of companies when you're looking to see if it's a value or not. A company with very little, very light growth outlook, I mean, that warrants a PE. So, it definitely helps to respect the market, I think. Don't always assume the market's wrong. As a technician, I acknowledge that the wisdom of the crowd is actually baked into the stock price to a certain extent. So um, if you think a stock is a value, well, what do you know more than all of the expert sell side research analysts out there who, the CFAs out there? Um, so there's definitely that piece of it that I agree with. So I always try and um, be humble with the fact that there's a lot of stuff I don't know about the fundamentals and what might happen, and other people do. And that's why you pay attention to price action. So when you see something like Nvidia that's gone, straight up this year, that doesn't make it overvalued. If you're going to look at the fundamentals, you really have to get a go to a deep dive to understand, what's the possibility here? Like, what's what's the upside earnings case, and like what's the probability of that, and then what's the probability that earnings don't materialize, that GPUs in the chip space becomes commoditized. It's something, it's a non-zero risk. So looking at things from both sides of the risk and reward spectrum fundamentally is important. But in my opinion, as a technician, there's no better indicator out there than price as to what the value of a company is. So just be humble when it comes to acknowledging that not every stock is dirt cheap. Not every stock is crazy overvalued. Chances are they're closer to fair value than we all think.
Wisdom of the crowds, and I find that a lot of new traders and investors don't want to believe that because there's that kind of contrarian edge to them. I should also say I've also am not the greatest at growth stocks either. I've definitely had my fair share of, wow, that's a 9 PE ratio. It's actually earning money. That looks like a great investment, and then 5 years of just going sideways basically. But nonetheless, on the chart I have Nvidia up once again, and I just wanted to show that chart because it is Nvidia since the start of the year up a cool 100% going into yesterday's earnings. And it touches up on one other aspect. And I was almost kind of at fault for this too. I'd been watching this story of Nvidia being up 50% since the start of the year, 70% since the start of the year, and thinking this is too much. This can't go any higher. And the aspect of trends and price is something that I've just continued to learn not to doubt too much. And on your end, how do you sort of balance that fundamental aspect with that technical aspect? Do you do fundamental research first to look for the soundness of a business, and then you approach the technicals of a company, or is it the other way around? What's sort of your process to balancing fundamentals and technicals? Because I can see where they challenge each other at times, but there's such an opportunity to use them both to your advantage.
Yeah, well, I to answer the question, I look at technicals first, to be honest, because, like I said, that's the best indicator, and from there you can kind of take a look at the valuation, the fundamentals, the business itself. But like in my opinion, it's so hard to be an expert in so many companies if you're a trader or an investor. So I would weight technicals more important. It all depends on your time frame, but you know, like I said earlier, it takes a lot of hubris to think that an hour or two of research on a company makes you have an understanding of whether it's how far from intrinsic value it is. And there's so many unknowns going forward with that. So I look at the price trend first, and I kind of go back from there. So like when it comes to my work at Seeking Alpha, that's kind of what I do. I got to play to the crowd a little bit. I would love to only look at price action, make calls that way. But, I got to, as a writer, you got to form a narrative. You got to look at the macro context. You got to look at valuation. You got to look at key event risk drivers that could impact the price. But I'm just trying to outline possible ideas and how investors can play, whether it's a stock, a commodity, an index, with risk management kind of top of mind. But like, I don't know everyone's time horizon. That's unique to each person. So that's kind of the tough part of making recommendations, is saying, okay, here, I think it's a buy. Here's a stop level. Here's where you should take profits. But ultimately, it's up to someone's time horizon to determine how much risk they want to take and how much reward they want to shoot for.
You mentioned the aspect of a few hours of research, this company because you did X number hours of research, what would that number be? Because I just like to address sometimes these new investor issues, because I've been there, many people have been there, where you do sort of look at a few financial ratios and suddenly think you're an expert on the company, when there's so much more than that. And when you start to dive deep, you do start to learn that over the years. Do you have a number, whether it's hours, days, weeks, where you would say that person really knows that company?
Boy, it's real hard to say, because I also think there's a bit of an art to it. Like, I imagine the real pros out there. I mean, like, Warren Buffett, for example, and some of those guys, like, they can identify businesses probably pretty quick that are really terrible and just move on to something else. So it probably takes a longer time to find a good business, where it's a little bit quicker to find a really crappy one. But people that have, frankly, that kind of intuition about how businesses operate, they're in a better stance. Like, I don't have that. I've got the CFA and all that, and I teach this stuff a little bit. But if I were Warren Buffett, I wouldn't be writing, right? I'd be just picking stocks all day and owning stuff for the long haul. Again, that's different for each person. I did work for a while as a research analyst at a fundamental shop, and we would always say, it may take a full week's work just to find that a company is not a good fit. So you're looking at 40 hours in that case of, deep diving through 10Ks, 10Qs, conference calls, speaking with management. I mean, that's the kind of research you got to do to really understand a lot of these businesses and how they operate, what their risks are. And that's just very obviously we all have day jobs, right? Like, we can't be doing that. So that's the tough part about being a true fundamental analyst. You can kind of bridge the gap, I suppose, between fundamental business understanding and technicals with more quantitative research, where you can kind of weigh factors and characteristics of businesses at a higher level and kind of go from there. But yeah, it takes a long time to understand a lot of these businesses. I would say at least a full week's work just to get your hands dirty with it.
That's cool. So the aspect of looking at a company to see that it's not worthy of an investment, it's sort of like a form of that inversion. I think I've heard either Munger or Buffett talk about. Is that something that you still hold to this day and still apply at times, which is, let me first make sure like this is not worthy, and then if it passes those checks, then I'll go deeper? Is that the mindset?
I think that's true. So, like, I don't do a lot of that kind of work anymore, but I think in general, it's easier to sift through the junk and throw that out there, and then try and find actual good businesses, with things like wide moats, with a pathway to grow earnings that may be free cash flow positive, but you may run into stocks that are not. They just have a really great niche in the market that hasn't been penetrated, and that could really work in the future. I mean, Nvidia is kind of the best of both worlds. Like, they have this strong moat in the GPU chip business that for now is pretty much their ball game. And we see that today with how like poorly Intel is trading. Maybe AMD can make some pathways into what Nvidia does, but yeah, it's things like that can really drive future growth that make what seems like a high valuation reasonable.
So in terms of actually competitors, and I saw some memes today about Intel ties back to the IBM aspect, even fundamental research, which is, if you are going to invest in a company or start your research, it's most likely there's a competitor out there, or two or three or four, and that's also worth really looking into. In the case of NVIDIA and AI, are you thinking about the sort of the cost to zero? Because is there a possibility that AI could be commoditized? Is that a thought process at all? Where, yeah, I was reading that a lot of the open. I read a note. You and I had mentioned this briefly. I saw that there was some sort of note from Google that was going around Twitter where they said that most of AI technology now has been open sourced, and you could be in your garage with a server and run a large language model yourself. And I wonder if, for this AI story, if you're seeing it from a winner takes all. It kind of brings us back to the large cap discussion. And by the way, on the chart here we have Nvidia ratio IWM, and it's a pretty stunning chart to see. Looks like Nvidia is basically just eating up all 2,000 small caps, IWM, the Russell 2000. The question though being is, are you looking at this sort of saying there's going to be an AI battle between a few large companies? Has Nvidia already won? What's your thinking about this in terms of the actual competition of the space?
Yeah, I mean that's a tough call. I mean, when it comes to that actual, you got to look at like Nvidia is the chip maker, and we all get kind of caught up in the hype on a day like today when Nvidia just reported like arguably the biggest blowout earnings report like in history of finance, right? So it's like we got to take a step back and be like, well, they make chips, which is super important, obviously, but AI is so much more than just who's making the chips, right? Like it's going to turn into efficiencies for across industries. So eventually you would expect entrants to come into the space, and how quickly that happens, I don't know. Like I would leave that to an industry expert to opine on, but this is one company in one part of the AI spectrum, and there's gonna be a ton of other winners from this. Obviously, a lot of losers. We may see a lot of IPO activity this year when it comes to AI, just like we saw with crypto and tech back in the day. Those will turn out to be nothing burgers. But we're going to have an emergence of companies that have a niche in AI and do it right. And Apple they may just be standing pat, waiting to pounce on something that's been their history. That's what has made them so great. They don't go for that first mover advantage. They wait for the industry to kind of shake out and then pounce on something that they know the consumer is going to know, that is the consumer is going to want, that they don't even know about. So yeah, that's where I kind of take a step back and say, let's just see what happens with that. I'm not going to pretend to know whether Nvidia's going to be the long-term rock star of this, or if new players come in and take share, or if it's just kind of a pie that grows and we have a whole bunch of winners. So it's going to be fascinating.
The comment about Apple is awesome. They have done that. I have not thought about that yet. That's right. Like, what are they doing right now? They are very silent at the moment, and even Facebook actually comes up when I think about this, because Facebook's quietly been working on AI for a while, but they're not really getting the same attention as some of these companies like NVIDIA is, or even Google and Bard or OpenAI. But Zuck's been working on machine learning and AI for a while. So I like that aspect of stepping back and waiting and being patient. It's almost like the strategy here is to go slow while everyone's going really fast, and there's lots of chatter and hype and news coming out. And on that note, you mentioned crypto. You mentioned another sort of thematic name that's happened the last few years. And as a writer and as someone following these narratives, do you? Yep, absolutely. Last question, really. Do you have you sort of been seeing a repeating pattern in these narratives? Like, is this something that you're not surprised by? This is just a part of markets, one story to the next, and this is just a part of that evolution.
Yeah, I mean, as investors and as humans, we're driven by narratives and stories and themes. What's dangerous is thematic investing has gotten so popular in the last few years, but so many of those themes have turned out to be just duds. And like you could even argue, like crypto is still kind of struggling. Like crypto's been around for more than a decade now, and still people don't really know how to use it. But now we have this new AI thing, which is at least in the public's eyes, 6 months old, but everyone knows about it now. So these themes are often fraught with risk, but that doesn't mean bubbles can't emerge. And when bubbles come about, like don't be afraid of them. Like jump on board them as a trader, and just wait until there's definitive signs that the trend is over. So participate in that the best you can from risk management in a risk managed way, and that's the way to do it. But it'll be interesting to see all the themes that branch off from AI that will emerge. So a lot of new ETFs, I'm sure, are going to come out on this area, and yeah, it's just going to be very important that investors know what they're getting into with some of these things and not get caught up with, an IPO that doubles on day one and get into that whole thing again. So, yeah, we're going to see a lot of new interesting themes that emerge from this. It's going to be very interesting.
Mike, I think that's the perfect way to end it for the 3 p.m. wrap, and we made it about an hour. I could have asked so many more questions. It was really great to have a true fundamental researcher on the show, as well as a CMT, so the best of both worlds. Thanks so much for the time. For those who find themselves listening to the show on our podcast or watching it on live streams or YouTube, you can follow Mike on Twitter. He's also on TradingView, and you can basically get his research and his charts daily. So thanks so much for tuning in. Mike, great having you on the show, and we will be watching this story very closely over the coming months. So appreciate all of your insights.
Thanks, Stefan. My pleasure.
I'll see you.
See ya.